Well, I
Yep.
appreciate you taking time with me today. I just want to talk a little bit about the single close construction program. Now, listen, obviously I watch your updates every day. We've talked a lot about inventory. You talk a lot about inventory, and we feel like we've got a pretty good solution on that. So we can kind of go back and forth, and I can answer some questions about the single close and tell you a little bit about what we're doing. It's been painstaking. We've been building this product over the last 2 years, and guess what? Now there's a real need for it.
You bring up a very important point, and that is the lack of inventory, which has been a sore spot for a lot of the country. And real estate's very local, of course, but when you take a look at the way the media portrays the housing market, they don't really get the differentiation between housing, the economic driver, and then there's housing, the investment. And they oftentimes say, well, home sales aren't as strong. Well, they would be stronger if we had more inventory.
Right,
And,
yeah.
and right now in the mortgage industry, that what you see happening is you see real refinance transactions. Actually, refinances are at their lowest level they have been in over a decade.
Wow.
So that's a concern, of course. The percentage of refinance transactions as a part of the whole pie now is about 35%. So all applications refinances make up 35%. It wasn't that long ago, Chad, when it was greater than 50%.
Right.
Always be a home for refinances. But so you have shrinking refinances, and that means that the burden of transactions you want to bring into your company has to be borne by the purchase side of the marketplace. So because of less inventory, there's less transactions, and that's really taxing a lot of companies. It's causing within the industry, as you know, some margin compression because of this. And so when you think about it, it isn't because there aren't enough buyers, or certainly not enough qualified buyers. It was just something that Realtor.com put out. And less than 10% of people who did not buy a home was because they didn't qualify. So we know that that's out there. So really, when you look at this as a whole, it's just simply a lack of inventory. And you say, well, can I get people to list their homes? That doesn't solve it, because if you list your home, you more often than not buy a home. So from an inventory standpoint, you haven't resolved the problem.
Sure.
It really has to be with additional construction, but it's hard because labor's tight, land's tight, financing's tight, regulation's tight. So anything that can be done to lift this or give an originator an opportunity to tap into this puts them in an advantage that their competitors don't have, and provides a solution to homeowners as well.
Yeah, we certainly agree. Obviously the focus on, okay, there's a tremendous demand, and that's a great thing, right? So when we see the demand, I mean, we see interest rates rising, but that really hasn't, tamped down the demand. In fact, we see more demand now than we've probably seen on the purchase side in the last few years. I mean, and it's a weird dynamic for our originators where they're extremely busy on the front end. So it seems like great times, right? Everything, every single bit of marketing seems to work, right? It's driving buyers in the door. They're qualified buyers. And then you put them out there in the street and they can't find a home, or they do find one and there's 6 offers. And, all of a sudden they're competing, or the homes are gone before they even, they're 1 hour on the MLS. And that's frustrating for some of those buyers. And we feel like we've got an option with that, an option to combat that by creating inventory by using the single close construction. And typically on the construction side, it's difficult to break into that market, right? So the down payment requirements, they're difficult, and they have been historically. And now with the single close, I mean, it's offered on an FHA loan at 96.5. It's offered on a VA loan 100%, a USDA loan 100%, and then on the conventional side 95%. So the down payment requirement is gone. But then there's another element there. Typically, let's say it's a first-time home buyer who's looking to build, and you're a traditional FHA buyer, right? Well, it's going to be difficult for some of those folks to carry 2 housing payments. Even during the build, they've got to traditionally make interest payments. So now they're making their rent or their housing payment now, and they're making interest payments for their new build, and that's difficult. And a lot of times it locks folks out of building. But with a single close, you roll all that interest into the end loan. So essentially, it's kind of like great marketing, right? No payments until you move in. And what we've seen with that is a lot of, buyers really excited to make the switch from, oh, well, I was going to buy a resale home, but I can't find one, but there's land available. Okay, and now I have an opportunity to build on it.
Chad, you've touched on so many really important things, and you were kind enough to walk me through this program. And, having quite a bit of origination experience myself, and been doing this for decades, being involved in the industry. I've had quite a bit of experience in this area, and I was literally just amazed by this particular product because if we were to take kind of an example and just view it. So from an originator standpoint, I mean, being able to offer this is really great because you have new avenues. Certainly it's great to talk to consumers directly. It's great to speak with your traditional real estate sources, but it's also great to go to smaller builders or larger builders to provide this opportunity to them because look, builders want to free up cash. They would like to be able to do that. And this product really does. So I think it opens the door from an originator standpoint, but think about some of the things you talk about and kind of the example that kind of resonated with me is just a simplistic example, but I think that if we walk it through, it helps people to understand. So look, you mentioned someone's looking at homes, but because of tight inventory, maybe they're not finding something that kind of checks off their wish list, so to speak. So they know if they built their own home that they can have exactly what they want.
Exactly.
But so many people, Chad, as you know, are shut out from this because traditionally speaking, to go out and acquire the land requires a significant amount of down payment. Then you've got 2 closes that you have to do, typically speaking, okay? And then you have to then get approvals, and you also have to have sometimes lay out the money, and then the builder gets reimbursed. Sometimes there's a participation there. Sometimes the builder gets paid. So it can be a bit daunting. And then, of course, at the back end of it, now you're subject to where the market is. And we know that right now there's a great probability that rates might be higher into the future by the time that home gets completed. And then the big one is now, how am I going to carry, as you exactly and accurately talked about, how am I going to live where I'm living, unless mom and dad take me in, maybe, right? But how am I going to live where I'm living and either pay the rent or in most cases pay a mortgage plus all the other expenses that go along with it, and now take on this additional debt of paying for this financing for perhaps several months into the future until I can narrow it down and now have one residence. I think what you've done here is you've kind of checked off all the boxes and solved all those problems. So if I may, to reiterate what you taught me on this is, and I really think it makes sense, is just to take a very simplistic example, say there's a lot for $100,000. If that were the case, and if they were to, let's just say the construction costs were, I don't know, to pick an even number, $100 a square foot in construction cost. So again, we want to make it simple here, okay?
Right.
And they're looking to put up a home for somewhere in the neighborhood of 3,000 square feet. Okay, so now that means that the 100,000 land plus the 3,000 square feet at $100 a square foot is $300,000. It's a $400,000 complete transaction.
Correct.
I think what you've done is, in most cases, you said, okay, we'll take 5% of that, and that's all you need, which is 5% of 400,000 is $20,000. You put that up, you give them the rest for the land.
Right.
Now, as phases are completed, what you're going to do is you're going to reimburse the builder as those phases are completed, with the borrower now not paying a dime or taking a dime out of their pocket. And then when it's completed, you roll it all into one final transaction. There might be some adjustments or whatever in case it goes shorter or longer, the duration, but you come in right around where you were thinking about coming in. And there's 2 things that are magical here. One is it's all part of one end loan, which protects them as far as the rate goes from rates rising into the future. So you know what you got day one. And then the other magical thing is you're not asking for any payments. You're accruing the payments. Now, yeah, it's no free lunch. They're getting that, but they're only paying on what they borrow. But then that is helping them to manage their cash flow so that you can keep a roof over your head and make those payments. And then eventually when it closes, and God willing, you've sold your home and made your move, commensurate with that within a reasonable time frame, like everybody else does who's moving. Now, when you take on that new transaction, now you just have one payment. So you have one payment, that's the old payment, and you have one new payment.
Right.
I think this is a magical program that really should be paid attention to.
Yeah, I agree. We're excited about it. Now, there are other elements to this. So, kind of the nitty gritty. There are some elements to this that are a little different than your normal loan, right? So it does follow FHA, VA, USDA, and conventional guidelines, But the builder approval, extremely important, right? And I can't stress that enough. There's a lot of risk on the builder side. We need to make sure that they do what they say they're going to do and that they finish the properties. So we vet that builder pretty heavily at the beginning part, just to make sure,
That protects everybody, Chad.
you're right. The last thing you want for a buyer that's building is a builder to go down, and then now you have to have somebody come in and complete a project. That's a nightmare for everybody that's involved in that. Now the carry costs are longer. Now you're going to have more interest. So we want to protect our buyers as well. So vetting that builder is extremely important. And then after you vet the builder out, you're going to go for project approval. So now your builder sits down with your borrower and specs out, hey, what do you want, the granite countertops? What do you want? What's special about this home? And then we come up with, with a cost summary. And then from there, we approve that project and cost summary. And then the loan starts in underwriting, and it's a normal underwrite, right? So on the FHA, I think we go down to 640, which I think is pretty aggressive. On the VA, there's no credit score limit. On the conventional, we go down to 680, which again, I think is pretty aggressive. Again, not locking out too many folks from this, right? We do want a higher standard of credit, but those elements of vetting the builder a little bit different than what you would normally see with a resale home, right? So you got to get that builder approved, get the project approved. Now you have your normal underwrite. You close one time, and now all of a sudden our relationship is between the GSF and the builder. And as the builder's completing phases, they're submitting for reimbursement. We do the draws to the builder. In the end, we wrap up the loan. You move in. Now you start making payments. So it seems sometimes like too good to be true, but we've done a couple hundred of these transactions so far this year, and that's exactly how it works. For getting into it 2 years ago, it was kind of wonky at first because on the other end, the agencies, it was kind of a forgotten about product, right? On the FHA side, on the VA side, on the USDA side, it was there, it was in the guides, but not a lot of folks were using it. And there was really no need at the time, right? We felt things were going pretty well in the mortgage business. Inventory was tight, but it wasn't as tight as it is right now. But now, out of the necessity, we dig that out, right? So there's a necessity to dig out those guidelines. And for GSF, we were able to actually secure a variance from Fannie Mae, which one of the only lenders in the country that have that variance, that allow us to do the single close to the 95 without requalifying that borrower. It's one-time close. And on the conventional side, I'm watching your updates every day, but we're protecting our borrowers against that. But they have the best of both worlds. We lock their rate in and they float down. So if it gets better by the time they move into the property, we'll actually readjust their rate to the lower rate.
Seems like you thought of everything, but the one point that you made rather quickly that I think bears repeating is that you qualify them once. So heaven forbid they hit a speed bump 4 months later or into the process. You don't have to either requalify them or look at their credit score once again. Maybe we've done enough loans to know, as soon as they buy a home, they go run out and they buy a car, this and that. And then we've all seen that, right? Don't do it. And sure enough, they buy a car. Well, I'm in the spending mode.
That's right.
I got the new house. I want a new car.
That's right.
So we know sometimes they get themselves in a bit of trouble and make us all get nuts here, so that we say, oh my goodness, what'd you do? Because now when we take another look at your credit, we rerun your credit, you don't qualify. You've kind of resolved that because you're saying, hey, we do it from the beginning, and then we're not going to have to recall. That's a pretty big box that you've checked there.
No question, that's big. Now, we take that risk on, obviously, and we're going to underwrite these. Like I said, it's a normal underwrite, but again, we're looking for a higher quality borrower there from a credit score standpoint, from a DTI standpoint. We're looking at all of those layers of risk for that particular borrower. But, quite frankly, many of the borrowers that are coming in the door are the best we've seen in years, right? They're overqualified in a lot of cases, which is fantastic. But, right, it's a rush when you get that borrower approved, and then it's slowly that rush wanes over time when they can't find that property. And if we can convert those better borrowers into building, it's great for them, it's great for us, and it's great for the inventory, because we're adding inventory to the market. Now, listen, we're a small lender doing this on a small level, and we're hoping to expand that by allowing other lenders, on the correspondent side to offer this product through GSF. Well, again, all of us together adding that inventory over time, things get a little bit better.
And to your point, Chad, you're exactly right. The numbers just came out for the second quarter, and the average FICO score amongst borrowers taking out mortgages in the second quarter was pretty strong, 724. I was actually surprised that it's that strong. But again, that has been rising over time. So it's exactly to the point that you have been saying. Now part of that is, yes, there are fewer transactions, so you're getting more of a cream of the crop out there as far as borrowers go.
No question, no question. Yeah, it's good stuff. It's good stuff. And listen. I'll tell you, I was interested to see what your thought was on this. And looking at the inventory thing, and kind of monitoring that. I think any leader of any mortgage company on any level at this point in time is watching the inventory numbers, and certainly we're taking our cues from you on a daily basis. Just interested in your thoughts on this particular product. I'm glad that you give it your endorsement.
I do. I think that it's something that if you are looking to expand your verticals as far as ways to bring business in, this will allow you to do that. I also think it's a good product for the industry. I think it's a good product for people that are frustrated with lack of inventory. So on so many fronts, from a borrower's perspective, I think it helps open up other options other than the limited inventory that they may be viewing in their own market. Sure. That kind of has them feeling like I'm settling, okay, or I have to chase. This would put something in their hands that potentially in the past might have been too many obstacles to make that happen. You've alleviated those obstacles. In addition, if you're an originator, I think this gives you opportunities to work with real estate agents who have builder contacts or work directly with builders. So I think it opens some doors for you. And look, if you're an originator out there today, everybody wants to increase volume, and a lot of people have seen certain pies shrink, and that means it's a more competitive environment. Why not have a product that does not have a whole heck of a lot of competition, so that you can potentially preserve margins and you can potentially bring in more business, and you can offer things that now allow you a discussion and a conversation with referral sources that can open up the doors to other opportunities for you as well.
Right. For the originator's psyche, right? I worry about that a little bit, especially as we go through some trying times here in the mortgage business. And there's certainly great opportunity there, but the psyche of the originator, right? It's, they're busy on the front end, but they're not closing the transaction. This does wonders for their psyche. All of a sudden, it's another lever that they can pull, another tool in the toolbox, and it's another referral source. So, and chasing the same referral sources over the years, the real estate agent, certainly a huge part of our business, and we continue to build those relationships, and we love our realtors. But adding another element of another referral source like a builder is a fun, more hopeful thing to think about, to say, well, now I have this avenue, now I have another avenue, and it does wonders for the originator's site.
Well, Chad, here's the other thing too, is that you can potentially meet with a small builder, or the realtor can introduce you to a small builder that's well capitalized and that has a good reputation, but they're a relatively small builder, and you get that in. Yeah. And then that builder says, hey, I'm doing a subdivision of 40 or 50 homes. They're going back to you. You're their go-to person because you offer another avenue that would free up capital for the builder.
Right.
So in other words, instead of that builder having to hold that entire project and wait till closing to get their money, they're in a process where they have other opportunities as well.
And the realtors are not left out of this, right? We have a number of builders that work with real estate agents that sell their properties. So yep. The real estate agent in and of themselves, they're not locked out of this. They're listing the property for the builder. We approve the builder. Now we're working with the agent to get them into the right units. They interface with the borrower. They're the builder salesperson. So there's opportunities on the realtor side as well.
I agree with you. I think it's a really good product, and I think it can enhance an originator's ability to increase their production and their referral sources and bring more money home.
No question. Well, listen, I appreciate your time. Thanks for taking it. It was great to get you thinking about this and kind of hearing it and giving us that endorsement. It means a lot to us, and obviously our relationship has gone on now. Wow. 18 years it's been.
Yeah, it's been a long time. I'm a big fan of yours. You continue to be a leader and an innovator. You have an amazing group of people there that you're leading. I'm proud to have a friendship and a relationship with you. And listen, just keep doing the amazing things you're doing. You're not only building a great business and company, but you're doing good things for our industry. So thank you.
That's great. I appreciate that. You take care. It's good seeing you.
Good to see you too.
All right, man.